markups that are included in the front of the book. Why don't we start with Walmart?
Okay. Well, Walmart we picked for this because it was one of the great winners of all time. We show the first cup with a handle that occurred in June of 1980. And it's a classic 23-week cup with a handle. And we show exactly where the stock breaks out of the handle area. And that was down around a split adjusted price of 10, which was really around 40 at the time, but we adjusted the chart for all the splits. So from 10, it ran to 80 in the space of just a couple of years. So this is obviously a pattern. Gee, you better learn how to recognize that pattern. It's a classic. It's a one that we've got 8 or 10 examples that are exactly like that. So we can define the patterns. This happened to be 23 weeks. Some can be 8 or 10 weeks. Some can be 40 weeks. But they tend to have the silhouette of a cup. If you looked at it from the side view, there's a left-hand part that averages 5 to 7 weeks on the downside. Then it rounds out for a few weeks along the bottom, moves up, and then it moves into the upper half of the pattern and then goes sideways, building its handle area. And when it comes out of the handle, the volume should increase at least 40-50% on the day it breaks out of the handle. And then on this particular chart, it ran up a little bit and went right sideways, very tight for 3 or 4 weeks, and came out again, which gives you a second place where you can buy and add on. You don't want to add more shares than you bought the first time, but you want to add. So if a stock is working, you want to wind up with a little bit more money in it. Now, as this stock progresses, it about doubles, and we marked up another cup with a handle that showed up in March of 82. And we've marked that the fact that on these particular charts, it shows a big earnings acceleration in the quarter that base was being built. And incidentally, we overlay the NASDAQ or the S&P average so that you can see what kind of general market these patterns were formed in. And we learned from building models that the patterns, the successful ones, 80 to 90% of them are formed because the market itself is in a correction mode. So this is kind of interesting for somebody to learn, that when you're seeing a market correcting and you're getting all worried and bothered and everything, just remember that all the new bases are forming during this period, and as soon as that market turns, they'll be coming out of there. And at the time that's happening, you're usually scared to death because the news has been so bad and your stocks have gone down and you're upset and see you're emotionally involved rather than reading the charts and seeing what they're telling you. So this one breaks out, and it was a split adjusted price around 21, and it goes further on up as we're going toward that 80 objective that we mentioned. And then there was another base that was a 9-week base that formed a little bit later on. So you find that some of these stocks can go a lot further than you think if you learn to buy a pattern that's strong, that has good earnings, that shows strong sales, and the industry conditions are fine. So there are characteristics, and you learn to read those.
And I think Walmart has a lot of very clear examples that people can see that very easily on here. Bill, one of the other things I wanted to mention was that in the new book, many of the charts do show an extended period of time, so people can get a better sense of how the stock's overall run-up did look.
Well, that's right. We try to show the pattern just before it took off and ran, but we want to show that movement. How far did it go, and how did it handle itself? And we have a little 10-week moving average line, and you can see that sometimes these stocks bounce off of that line 2 or 3 times, and it's an additional buy point when it pulls back to that line. Yes, you see the pattern, and then you see what happened afterwards.
Let's take a look at Costco. And I know I've heard you talk about this one at some of the IBD workshops, and you've mentioned how this one came to your attention when you heard about what Saul Price was doing in San Diego.
Yes, I was in San Diego with a friend and happened to go out and look at one of Saul Price's Price Company stores. And I was really very, very surprised because they had 20 checkout stands, and and there must have been 15 or 20 people in each line, and they didn't have the little wire baskets you see in most of the supermarkets. They had these gondolas that were huge, and they were just stacked with all types of merchandise, usually a couple $100 worth of things. And I realized right there that I was looking at something that was totally unique and far superior, and they were very, very busy. And when I went back to Los Angeles, we tried to get a chart on Price Company, and there weren't any available because at that time it was